Greeting to you, dear traders, and you're watching the daily market review with me, financial analyst of Grand Capital Company, Sergey Ilyin. And our daily heading is dedicated, as traditionally, to the technical analysis of Forex Majors. So let's start our review from the first pair, the most famous Forex pair. It will be Euro and US dollar. So the rally from Tuesday's bear trap low at 1.2763 is targeting key projected resistance at 1.2902. The following support line of a 7-week bull flag bear channel marks the 1.2763 low, and projected resistance at 1.2902 keeps the 3-week bear wave from the October 17 reaction high at 1.3140 structurally intact. Only above 1.2902 would leave the 1.2763 low as a potential bear failure, opening 1.2955. Keeping 1.2902 intact would prompt weakness back towards the 1.2763 low, which is protected by 1.2815, and weekly chart of Euro and US dollar trend is bearish. Okay, let's move forward to the next pair. Let's see. Okay, and it will be US dollar and Japanese yen analysis. So when this Asian session weakness has generated a new downside target at 79.73 as a bear wave from the November 2 peak at 80.68 subdivides, the 79.73 target is a minimum downside requirement, and last week's low at 79.27 would come into the picture on concerted US dollar weakness. A recovery above the 80.45 lower higher would put US dollar bulls back in control, opening the 80.68 peak. Weekly chart of US dollar and Japanese yen is bullish. Next pair, Great Britain pound and US dollar. So the recovery from Monday's 1.5958 low eyes resistance at 1.6060 and 1.6080, although gains are considered corrective. The setback from the November 1st reaction high at 1.6175 continues to dominate the daily chart, and Monday's low at 1.5958 will remain vulnerable while resistance at 1.6080 caps. The 1.5958 low shields the important October 23 reaction low at 1.5914. Only a sustained break above 1.6080 would defer the bearish outlook, opening 1.6130. Weekly chart of Great Britain pound and US dollar trend is range. Next pair, intraday analysis of US dollar and Swiss franc. The setback from Tuesday's 0.9456 high is expected to find the base in the 0.9345 and 60 area, while support at 0.9345 remains intact. A fresh wave of US dollar bull pressure is expected to reopen the 0.9456 peak, so threatening further gains to 0.95 and 0.9567. Only a sustained break below 0.9345 would suggest a return to the 0.9277 higher low is on the cards, and weekly chart of US dollar and Swiss franc trend is bullish. Okay, and final pair for today will be intraday analysis of Australian dollar and US dollar. Wednesday's Asian sessions strength reopens upside targets at 1.0487 and 1.05. However, only a fresh wave of a bull pressure would manage to force a break through 1.05 towards 1.0588. Support at 1.0409, would have to be broken in order to question the bullish outlook, and exposing 1.0362 and 1.0331. Weekly chart of that pair, I mean Australian dollar and US dollar trend, is bullish. So my day traders, that was all for today. It was me in studio, financial analyst of Grand Capital Company, Sergey Alin. For more analytic information, visit our website www.grandcapital.net, as you can see behind me on the monitor, our address of the website, and there you will find a lot of interesting materials about our trading conditions, bonuses, different actions, and so on. And I wish you the fair trends as always, and goodbye and good luck.